What is good, YouTube? Charon FX back again. I'm back with a new episode. Alright? I told you I'll be here for you 2023. It's part of my mission to make you profitable in 2023. You know what I'm saying? So if you're not subscribed yet, make sure you subscribe. I repeat, if you're not subscribed yet, make sure you subscribe, bruh. Cause I got gems for y'all. And I also appreciate y'all for the support, because from your comments, I feel like my videos are really helping you elevate your game. You know what I'm saying? My videos are very helpful to y'all. So please do well to subscribe. Alright? With that being said, let's get to business. Taking a look at GBP CHF, Great Britain Pound, Swiss Franc. Alright? From the descriptions on my chart, we can all see we are in a bearish trend. For you all who don't see we are in a bearish trend, let's all figure it out together. Alright? So what do we see here? Price created this higher high right here, okay? After it created this higher high, what happened next? It created a higher low. After price created this higher low, what did it do next? It went ahead and broke above its previous higher high and created a new higher high. This was price's previous higher high, okay? And it broke above. We broke above and created this new higher high. Alright? So after it created this new higher high, what did price do next? It went ahead and broke its previous higher low and created a new lower low, which is this low right here. Price broke this higher low and created this lower low. So after price created this lower low, what did it do next? It went ahead and created a new lower high. Why is this a lower high? Because this high is lower than this high. Okay, so after price created this lower high, what did it do next? It continued down to create a new lower low. After it created this lower low, what did it do next? It created a new lower high. Do you understand? Why is this a lower high? This high is lower than this high. That's why this is considered as the new lower high. So after price created this new lower high, what did it do next? It continued down to create this lower low. Why is this a lower low? Because this low is lower than that of this low. Okay, so from what I just did, we realize we are in a bearish trend. Okay, we realize price is trading within this lower high right here and this lower low. Okay, price is trading within this range right here. Alright, so now we know the H4 is bearish. From what we just did, we know the H4 is what? Is bearish. Okay, but the purpose of this video is to teach you all how I caught a bullish move in the bearish trend. Alright, I repeat, the purpose of this video is to teach you all how I caught a bullish move in a bearish trend. So this was the move I caught. Okay, this was the move I caught. So now let's go to our H1 and let me show you how I caught this move. Alright, So coming to our H1 time frame, alright, what did I do? All what I did was to identify my H1 market structures. I repeat, all what I did was to identify my H1 structures. So let's identify the H1 structures together. Alright. So first, we have this lower high right here. Okay. Which went down to create this lower low. Alright. After this lower low was created, what the price do? It went back up to create this lower high. Remember, this is the H1, not the H4. Alright, so after price created this lower high, what did it do next? Continued back down to create this lower low right here. Alright, so after price created this lower low, what did it do next? It went back up. Okay, broke above this lower high and created what? A new higher high. So at this point, the H1's trend has shifted from bearish to bullish because price broke the H1's last lower high. Okay, I repeat, since price broke the H1 time frame's last lower high and created a new higher high, it's considered as a shift of structure. Okay, price moved from bearish to bullish because it created a new higher high. Alright, so after price created this higher high, what did it do next? It went ahead and created what? A higher low. After it created this higher low, what did it do next? It went ahead and created this new higher high. Okay, after price created this new higher high, what did it do next? It came back down. It came back down into our higher low area or our higher low zone. Okay, so from what we just did, we realized the H1 shifted from bearish to bullish. Okay, keeping in mind our H4 is still bearish. The fact that the H1 structure shifted from bearish to bullish doesn't mean the overall trend is bullish. No, I repeat, the fact that the H1 structure shifted from bearish to bullish doesn't mean the overall trend is bullish. No. Alright, so as price, let me clear this one. Oh, yeah, good. So as price approached our H1 higher low, what did I do? All I did was to take my rectangle to enjoy a zone at a higher low. Alright, so as price was approaching a higher low area or a higher low zone, what did we see price do? We saw price reject the area, giving us an indication that buyers were in control of that area. Okay, so after price rejected a higher low area, what next candle did it print? A bullish engulfing candlestick. Why a bullish engulfing candlestick? Because the volume of this black candlestick is more than the volume of this red candlestick. Okay, or the size of this black candlestick engulfed the size of this red candlestick. So that was our confirmation. So our first confirmation was a rejection, and our second confirmation was a candlestick confirmation. Okay, so after price printed this bullish candlestick, which gave me a signal that okay, we are about to rally back to the upside. What did I do next? All I did was to wait for price to retrace a little bit to the downside. Okay, so my stop loss doesn't become wide, so I get a tight stop loss. Okay, so after price retraced a little bit to the downside into our zone, what did I do? That was when I went in for buys on this on the wick of this red candlestick. I went in for buys on the wick of this red candlestick. Alright, so this was the point, this was the price I went in for buys. Okay, so this was my entry right here, and my stop loss was right below the wick of our rejection, which gave me a stop loss of 25 pips. And where did I place my take profit? Right to our H4, right to our H4 what? Lower high, which is this zone right here. Okay, that was the only place we expect price to get to see what it does, whether it continues bearish or it breaks above that zone and continue bullish. Okay, so that this zone right here, our H4 lower high slash our H1 higher high, was our take profit zone. Okay, which gave me a risk to reward of 1:5. This was my first entry. Now let's get to my second entry. How did I get my second entry? All what I did was to connect this point. Let me remove it. All what I did was to connect point A, point B, and point C, and just wait for a breakout. So all what I did was to take my trend line and change this to the line charts and draw from point A through point B and point C. So this all I did. Alright, and I switched back to our candlestick chart. So after drawing my trend line, what did I do next? I went down to my 30 minutes time frame. Okay, so now let's go down to our 30 minutes time frame for our second entry. So coming down to our 30 minutes time frame, what was I waiting for? I was waiting for the breakout of our trend line to get my second entry. I repeat, I was waiting for the breakout of our trend line to get our second entry. And where did the breakout happen? Right here. Right here. After price broke out with this bullish candlestick, that was when I went in for buys. Or that was when I went in for my second entry. I went in for buys. Okay, right here. Right after the closure of this candlestick. Boom. Stop loss right below that candlestick. Bro, 8 pip stop loss. 8 pip stop loss. Place my stop loss right below that bullish candlestick. And my take profit right at our second touch of the trend line. Okay, that was where I placed my take profit. Do you get me? Risking 1:8 risk to reward ratio. Alright, risking 8 pips to make 66 pips. As simple as that, bruh. This isn't complicated. This is the simplest shit you see about day trading on YouTube. Bro, for real, I'm feeding y'all with this knowledge for free. All you gotta do is subscribe to the channel. Man, hit that subscribe button. These are the things your gurus are putting together and selling it to you as a course for $1,000, 2,000, bruh. But you getting it for free on this channel. All you gotta do is to subscribe. Alright? Just subscribe. Just hit that subscribe button. You feel me? I'll see you in the next video. Peace. Child FX. I'm out.